Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, May 9th, 5:39 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. Check the trend gauge over here. We're one day away from having all four green arrows, just the way bulls want to see. Market leadership green. And then the three time frames that we track the five major indexes against: the short-term 21-day exponential moving average, medium-term 50-day moving average, long-term 200-day moving average. All above those levels, we just want to see a weekly close above the 50-day, and we put some distance between the 50-day and the price today. So looking likely that that's going to happen, barring a market sell-off tomorrow. Harsh sell-off is what it would take. So what happened today? Bad news equals good news as a 2-day rest breaks higher. So before the open, we had initial jobless claims come out, and they were at a 9-month high, above expectations. If you've been paying attention recently, the market seems to applaud any negative economic news that would be considered disinflationary and lead the Fed to down the path of cutting rates. And that's what we saw. The futures were slightly negative when that news hit the wire at 8:30 Eastern time. They popped higher, pulled back near the open. We opened just barely higher, and then a quick flush in the first 15 minutes, and then a nice break higher. So bad news equals good news. And then at 1 o'clock Eastern time, a 30-year bond auction went extremely well, and yields dropped on that, and that kicked the market into another move higher. Nice close across the board. Here are the final numbers. Our 21 over 21 list: 17 out of the 21 positive on the day, up an average of 1.32%. This is what you want to see out of leading stocks on an up day. The big eight: 6 up, 2 down, but NVIDIA and Tesla down 1.6 and 1.8%, leading the big eight to be basically flat on the day. Our G8, this is our Revere Growth 8 ETF composite. 7 out of the 8 up on the day. Only ARK-K, which if you look at the charts and the top 10 holdings in that, Cathie Wood not getting it done. But still the RG8 up an average of 0.71%. S&P 500 up 0.5%. Equal weight up 0.84%. Good from a breadth standpoint. NASDAQ 100 up 0.22%. Semiconductors weighed on the NASDAQ today. Equal weight up 0.45. Dow continues to be on a roll, up 0.85%. Mid caps up almost 1%. Russell 2000 small caps up 0.9. Global diversified 60/40 stock bond up 0.41%. Our in-house flagship portfolio, GROTECTION, up 0.69%. Let's get into the charts. First, as always, we start with the S&P 500, and you could see this in a textbook. Let's get the line pen working. So you got your move up higher. You got your bull flag consolidation for about a day and a half, and then a break out of that little bull flag. This is how they draw it up in Technical Analysis 101. When you're in an uptrend and you consolidate, that consolidation should resolve in the direction of the primary trend, in this case being up 3.5 days, 1 day of rest, breakout today. Now we take a look at the moving averages below and also horizontal support, which would be the bottom of this third day up, as this matches a area of consolidation here back in late February, beginning of March. It also served as support before we broke down, and now we've recaptured that level. This is what bulls want to see. And until we get evidence to the contrary, we keep playing it on the bull side. 21-day moving average hooked up probably Tuesday or Wednesday of next week. If this consolidation holds, it will attempt to cross back up through the 50-day moving average. So good stuff there on the S&P 500. NASDAQ 100, minor weakness on a relative basis this week. You can see as we're really just going sideways on the NASDAQ 100. Dow Jones Industrial Average, and that's not necessarily a bad thing. It means other sectors, money's not fleeing the market. If it's coming out of tech, it's going into other value sectors. All rotation takes place within the S&P 500. This is why we're big proponents of having a core holding in the S&P 500 as long as the market is trending higher and as long as it's above the 200-day moving average. That's where all bear markets occur, is under that 200-day moving average level. So 6 days up wasn't enough for the Dow Jones Industrial Average. Today made day 7 and up nicely, 0.85%. The S&P 400 mid-cap index, pretty much the same consolidation pattern, 2-day, day and a half consolidation and breaking up near this 3,000 level now. And the Russell 2000, same situation, didn't surpass the highs from 2 days ago, but a closing high as well. So good news there as well. And note the relative strength over the last 3 weeks in small caps. Let's go to the VIX. It continues to go lower. Also confirming, look at that's quite a move down in the VIX from 2136 2 weeks ago to 1269. There are a lot of trading systems that fade extreme moves in the VIX. We don't employ any of them, but the VIX when the VIX has been below 15, this is where the S&P 500 has done its best work, going back to late last year and early this year, despite and then the pullback that we had in April corresponded with a spike up in the VIX. Let's go to the dollar. Weak dollar, good for stocks. Dollar down 0.30% today. How did that transform over to the precious metals? Nice breakout there from a tight consolidation in gold, up 1.6%. GDX up 3.51%. Very nice move there. And silver up 3.65%. Bitcoin up 0.5%. Still fighting against this declining 21-day moving average. Over to bonds. Let's take a look at a 5-minute chart here, and let's see if you could tell where this 30-year bond auction took place, because prices spiked up, meaning rates spiked down right at this 1 o'clock level time period. So rates pulling back, good for stocks. Stocks took another leg up at that point. There's the broad bond index, TLT, the long bond index. It's very obvious here as well. The big break higher in prices. And if prices are higher, you know that rates are coming down 0.5%. On the long bond and the 10-year TNX down 1% as well, below this now declining 21-day moving average, and making this breakout a failed breakout, which has again corresponded to strength in stocks. That's our inter-asset correlation segment. Let's go on to the tail of the tape. You can pause this. So here's the initial jobless claims numbers, 231K versus 212K. That's a 9-month high. I mentioned the bond auction. We're up 5 out of 6 days now, 6 days above the 8-day exponential moving average. That's our short-term, ultra short-term trend indicator, 5 days above the 21, making new highs, keeping our expectations positive on the S&P 500 and NASDAQ 100. Sectors today, 10 out of 11 higher. The one that was not higher was tech, XLK. Officially, we saw commodity strength today, gold and silver stocks, uranium, copper, and oils, as well as utilities and real estate. On the downside, the dollar, semiconductors, and software. So what did we do? in our in-house portfolio today. CEG, we held that into earnings, positive reaction to that earnings report. We added to that position, also added to our existing Kava position, and added more SSO as an ETF exposure to the S&P 500. Bottom line on the day, bad news is good news. 2-day consolidation resolves higher. Let's take a look at a couple of charts. We'll focus on the 21 over 21 leaders list. We actually have 26 in here. And we'll go with the top 5 on the upside, top 5 on the downside. So here's CEG. We added to this today on the breakout. Nice reaction to earnings. Sales lower, but earnings up by 133%. Good reaction to the conference call. Relative strength line confirming the new high. We really like this name. GDX, we mentioned this. Also have a position in this. Anything green flagged over here, we own it. Cameco, uranium stock, up 3.3%. Abercrombie and Fitch, the apparel stocks pulled back hard a few weeks back, but putting in the right sides of their bases now and showing relative strength over the last 3 weeks. Abercrombie and Fitch looking good. Coupang, rough day yesterday, but regaining back to the 21-day moving average today. Volume way below average compared to the sell-off, though. And finally, Freeport up 2.24%. Let's show the bottom 5 now, the weakest, and we own some of these. NVIDIA, an uncharacteristic weak day today, but this is looking like a very nice little bull flag here after a move up. Very similar to what we saw in the indexes. All it is a pullback to the 8-day moving average, still above the 51, still above the 21, and on declining volume. That's bullish. Micron also pulled back today, unable to hold that 120 level, but as long as you're above the purple line, the 8-day exponential moving average, there's no cause for concern in any stock. SE, tight consolidation day today, down 1.14%. Spotify unchanged, bouncing off the 8-day. We added to this yesterday on the break above 300. That did not stick, but it did bounce at the 8-day moving average today, closing unchanged on the day. So those are the 4 that were either flat or down. VRT, one of our larger positions, ran into this 100 level, and it's acting as resistance, but again, still trending above the 8-day. Nothing wrong with that. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, my partner Dan Stewart can be reached at dan@revereasset.com. The website, revereasset.com. I'm on Twitter @dvandenbord and YouTube, Revere Asset. We're also posting our videos on Twitter every night as soon as they're ready. And remember, it's not how much you make in the markets, it's how much of that you can keep. We have a dual mandate for our approach. Participate in uptrends. The trend is your friend until the end when it bends. And that's what you saw here. Broken trend line. Stop, start getting hit in our in-house position. We rolled over. How low would we go? We have no idea. But we stopped at the 100-day/20-week moving average, bounced up, typical to fail at the 50-day moving average on the first test, a little bit of a pullback, and then big strength coming in 5 of the last 6 days on the market. If you think that this is a common sense approach to participate in the markets when they're going higher and try to get the hell out of the way when they're going down, very similar to this sell-off in 2022, very similar to COVID, very similar to the financial crisis back in 2008. Our rules just get us out of the market when the market breaks certain levels and then back into the market when it goes higher. Saw on Twitter some guy saying, oh, sure, you can get out of the market, but then you stay out because you're scared and you miss the 50% runs higher that happen. Well, those mid 20% gains that we're looking at since the beginning of November show a different story. I mean, plain and simple, the rules get us back in when we get back above key levels. Common sense approach. Anything that's broken in your life, do you take action to fix it? Your check engine soon light comes on in your car, you take it for service. If you're going out for the day and it's raining, you take an umbrella. Same situation with your portfolio. It's just Wall Street hypocrisy and conflict of interest that wants you to stay in their funds when the market is in a downtrend so they can collect their fat fees. Um, we know how to protect capital when the market goes bad and will participate when the market is favorable. That's what technicians know. That's what trend followers do. And with that, I'm going to wrap it for Thursday, May 9th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.